Hello and warm welcome to the latest WOA webinar. Delighted to have you join us today, and here I'm delighted to be joined by two great presenters, Daniel Huszar, Sales Director of FCOM, and Olena Gryniuk of SME Banking Club. And this is a joint effort between WOA and SME Banking Club, so welcome to you and thank you for joining us. An interesting time to be having a webinar, of course. We put this idea together some months back, looking at the idea of updates of innovation in receivables finance, what's actually going on, what's changing, what's developing out there. But of course, recent times have changed a lot and given us a lot to think about. So everything we talk about today will be given with an overlay of the current environment, and we're looking forward to hearing the thoughts that Olena and Daniel have, and of course you out there, any questions that you have to raise with us during the course of our webinar. So I think it's an interesting time. Technology is going to be a really important issue for us. Innovation in our industry is going to be an important issue for us. So let me hand the reins over to start with Daniel. And Daniel, tell us what your thoughts are.
Well, first of all, thank you, John, and thank you for having me. And it's great to be with you and Olena, to be here. And yes, and I had this all prepared before, but well, with the recent situation, we have to take a step back and think about things. And if that's all right, I would just fire up my presentation and go through it real quickly. Or should we wait a little bit?
No, I think it'd be great to make a start and give people some sort of thought starters. So please go ahead.
Perfect. Okay, let me just open this up, and here we are. So yeah, innovation in receivables finance. I will give a quite abstract overview about my thoughts and some trends, and Olena will have more specific examples to her respective markets. And I would like to start this off with a quote by the great analytical philosopher Bertrand Russell, that in all affairs, it's a healthy thing to now and then to hang a question mark on the things that we have long taken for granted, and this couldn't have come at a better time, I think, because now we are forced actually to do this. This is not just a philosophical exercise in the market, but really we are forced to do this, and especially now with technology in the spotlight, so to speak. And one important thing really is we are making a lot of predictions, and I myself, as a kind of a futurist or future-oriented person, I like these kind of predictions, but now I will be very, very cautious in making these predictions, because what we will see, is that in these uncertain times, it's really hard to make them. And my take on it will the whole thing encapsulating this presentation will be technology as transformation, and not to see it like technological transformation, really, that we see, for example, that we say we digitize things and we make things more efficient. This is what's happening, and this will be nice, but I will paint a picture of an uncertain environment now before I go into my examples. We'll see what I mean by that. I mean that we don't use technology to change things, but technology is used to change our perspective on things and to change us, basically. Because now a very doomy and gloomy picture here, as I picked that because of the industry and supply chain, the disrupted supply chains in 2020. Now, of course, because we don't know how this will really impact, how deep the impact will be in the supply chains, who is going to be there, especially the smaller players, or who's going to be left there. And so first thing, and I want to give you an example of, is 3D printing, because of the supply chain issue. And maybe just to give you a little bit of theoretical background, so 3D printing is basically a 3D model in a computer that is printed by a machine into the real world, layer by layer. So we have some kind of material, usually plastic, which is melted down, and then this 3D model in the computer is being printed layer by layer in the real world with this melted plastic, for example, to give a 3D object, in the real world, for example. And why do I choose this example, and especially of transformation? This is because, of course, you can print bigger objects and smaller objects. This is a small one, a small 3D printer, like a semi-professional level. And but what you can also do is to change and transform existing products. Just as in my example now with a company called, for sporting goods, called Decathlon. They were manufacturing for a long time snorkeling masks. And then, well, COVID came along, and two students from Germany made a plan, and with 3D printing to make emergency breathing masks out of these snorkeling masks, and they succeeded, and they produced quite a lot of them for not being a huge company. So yeah, and it worked, and it applied, and then Decathlon even reacted and applied this plan. Let's say they donated 10,000 masks, I think, and then they even in collaboration they made these plans public and online, so other people could print these parts and make breathing masks. And yeah, so this is what I mean. This technology really can transform the products around us, and even maybe fill gaps in the supply chain, and make really unpredictable things happen. So basically, what we have is an existing supply chain that is changing through the crises, and basically, it's almost as if the digital realm, as if technology is leaking into the real world and transforming it, transforming products and transforming supply chains. I mean, if I would have a specialty part that as a big manufacturer that I cannot get anymore, maybe I could use 3D printing to manufacture it, because this is, for certain designs, 3D printing is definitely scalable and for mass production, just as Adidas did with some parts of its sneakers, for example, which was mass produced. One part of the sneaker was 3D printed and mass produced. And this is just the, let's say, the unpredictable picture that I want. I mean, this is a great effort. I mean, I applaud everyone who was involved in that. That's great creativity. But it's just so unpredictable. And you, John, sent me some other examples. So thank you for that. That is
yes, I mean exactly
world.
that. And your picture there of the network, the knowledge spreads through these networks, and people replicate the same idea and the same concept. I've seen numbers of examples of protective equipment being produced on a cottage industry basis, precisely through people being able to share the designs and utilize 3D printing to actually create these bits of protective equipment. But I've also seen it too, as well, examples of it on a commercial basis. There's a recent example of Air New Zealand using a blockchain-based exercise to transfer the design of an airplane part, which was sent forward in advance of the plane to its destination, the part being 3D printed and then put onto the plane after it landed at its destination airport, which gives a whole new meaning to just in time.
Yes, yes, absolutely, absolutely, and I think these examples are just the beginning. So where we see, I mean, we kind of see in this example, we see 3D printing, but we kind of see also what the internet was supposed to do to help in the very beginning of the internet to really foster the scientific community, because this is exactly what a scientific community does through collaboration of ideas and through creativity and well a communication network. But yeah, so this, well, this is unpredictable, but it's also kind of a positive, maybe to start with a positive note. This could be also seen as a positive environment where creativity can thrive. And now I will give you 3 examples of technologies that I think that that very cautiously picked, because these technologies were thriving before the crisis, and I think it's safe to say that they have a huge potential to thrive within our industry during and after the crisis as well, because they are just so useful in that regard. And yeah, and so the first one is artificial intelligence, um, which is which is kind of easy to say and easy to predict, because it's long in the, let's say, in the hype cycles that we see. This is now been adopted into the mainstream, even with picture recognition, with self-driving cars. And within our industry, especially in the risk analysis realm and pattern recognition, this has been a long-staying player and will only be improved. And just to give you an example, really easy example, how it can be used within our industry, that we have a lot of data, let it be invoices, for example, and then we put them through this filter, a filter of pattern recognition, an AI-powered pattern recognition, that are, as of now, mostly predefined. That says they are based on the experience that risk managers and analysts had for many years, for fraud cases, and that they will, based on these criteria, pick out invoices out of that huge chunk, that big data chunk of hundreds of thousands of invoices, and flag them to be potentially fraudulent. And then we can decide, then we have the human interaction part. So the human, the risk manager will always part of the equation, working together with the AI to determine if this is really fraudulent, if we should take action, or if there's no action needed, in a way. So this is this is happening now. And to make a small prediction, and this is also what we've been working on, is that that you compare more client behavior, for example, current behavior against past behavior, the last 30 days against the last 180 days. How has the limit exceeded more? Is it used less, the limit drawdown, and these kind of things, and to make predictions. What is the health of this company? What is the health of your client's business? And what will change more and more, and we are seeing this also within our products, is that through machine learning especially, we will see that now we tell the system more what the patterns should look like, or we give it more guidelines. And with this unsupervised learning experiences, it's more that the AI will find patterns in itself to give us new ideas what risky behavior could look like. And I think in maybe even through data that we don't use that much right now, like social scoring, where does a person live, in what environment, what's in their shopping cart, which is, of course, quite intrusive at 3 a.m. in the morning at the Amazon shopping cart. But and I think we are in dire need of new models. We will be in dire need because the old models might not be working in the new world that we will be entering. And if they do, then it's great. Yeah, then we just have some new models to make even better predictions. Let's say.
Daniel, I just to interrupt you there with a bit of a question, which I think some of the audience might appreciate. Just to try and differentiate a little bit for us between AI and machine learning. What really is the difference between the two? And also, do you believe that they are at the stage where they are able to learn to predict in environments as we are now, where there are sudden, very rapid and dramatic changes in the environment, and sort of previous knowledge doesn't help us terribly well predict what's happening in the future?
Oh yeah, thank you, John. Those are very good questions. So machine learning is a subset of artificial intelligence, just for, as well as definitions go. And I would say, well, it has been, especially in some fields, it's very, very advanced. Like with, not especially in our fields that are relevant to us, but for example, image recognition. If you go on your phone and it's able to tag the same people in the pictures, for example, or self-driving cars wouldn't be possible without machine learning. But it's referred more as AI, let's say, because it's a bit more of a PR relevant term, let's say, and I believe, yes, it is quite far. The problem that we'll face is more what kind of data we will need to have new models, and how do we get that data. So it's more of a data quality problem, because the problem is, if we have the AI to figure out new patterns that we don't know at the moment, really, it could surprise us really with new things that we can see, but we don't know what they will be, so we don't know what data we will need for these models. So that's part of the challenge of figuring that out, and this is why I think will be lots of companies experimenting with data that we don't take so much into account at the moment. And also, maybe to close my point, what can really help us is something like PSD2, that banks have to provide an API to transactional data, for example, due to the regulation, PSD2 regulation. So that we actually have a lot of data to play with that we didn't have access to before, for example.
Okay, thank you. And that has raised a question from the audience, from Robert Metters, that really, how can we deal with this if we don't have sufficient data ourselves? But of course, one of the points about this is that you're looking for patterns in a much wider environment than necessarily an individual company's inherent own data.
Yeah. That is a very good question from Robert. So I mean, collaboration will be very important to do this, and then working together, of course, from various fields, especially in markets where it's not that much abundant data. You know, and I believe in probably in more mature markets we have a lot of data. We really might, and this is really the first question to ask. What can we really leverage in the markets where there is not so much data, but we really are also dependent on the service providers who do have a lot of data. So we definitely should combine our knowledge there and make the environment safer for all of us due to that. Yeah. Okay. Thank you for the questions. So this is, and by the way, interrupt me if I'm running out of time. This is kind of the middle now, but and now I will go just very briefly into another example that might not so well known, which also touches upon AI, because which is automation. It's robotic process automation, to be quite exact. And this is basically, just as an intro, this is basically a software bot, a software robot that can be programmed to just execute and process standardized tasks, more or less standardized tasks. And think of it as a macro in Excel. We all when I did my first apprenticeship, I had to do this. It was I really hated it, but it was very useful. So it goes through calculations in Excel, for example, one by one. If you have you know that you have the sum function, and then you can take that sum and do something else with it, and do something else, and multiply it by another number. So it's in Excel it would be a process of mathematical equations that are run one after another. But with robotic process automation, this now means you're not limited to one system, or you're not limited to one software, but it's multi-platform, and it works across systems, just like in this graph. And what this means is that you can take an email and have the robot read a certain kind of information, enter it in a CRM system, for example, or an accounting system, and post that information somewhere, that invoice, and generate an email back through Outlook to a number of recipients that you defined earlier, or generate reports automatically, copy and paste files automatically. And it can really, you can automate almost everything that is somehow standardized across softwares. And if it's somehow repetitive and structured, and it adds up, because one bot, after it's done with one task, it can do another, or they can run in parallel. So for me, this is quite fascinating, because you can close gaps in your workflow. Ultimately, even with software that is quite dated, you don't need especially to update it. You can still use Excel and lots of manual things. You do lots of manual things with it, but then you can use a bot basically to automate certain tasks. And now maybe to just join this with AI, and I believe that this is done as well. Right now, it's that these bots will get more flexible, because through machine learning, they will be able to just to deviate a little bit from, let's say, these very stringent paths, and make their own small decisions, and so you can give them more complex tasks. Yeah, as a result of that. And this is basically also what machine learning does, that it's maybe also to answer the question a little bit more that was asked before, is that the system is really is more independent from parameterization, that the human really tells the system what to do, and it's automatically does it, but it kind of gets its own ideas about what the best path or best solution to a problem is, in a way. Yeah. So and we will definitely, I mean, this is a trend, of course, with efficiency will always be important, probably especially right now. And then, and this is the closing, these are the closing slides, and then this is my third point is a very easy one, and that is so apparent that I repeat it so often, because sometimes I think it's not so apparent. I mean, with the smartphones are everywhere, they're the window into our world, and now basically sometimes I think now they are our world, because now we interact by Zoom. We have lots of Zoom meetings, even with our loved ones that we cannot see. So it's really since March 2018, we had 50.1% internet access through mobile devices, and the number now is much higher, of course. And so my point being that user interface design is so important. This is probably even the most important. If you only do one thing and invest in one, let's say, technology trend, or invest in your technology, invest in design, and definitely, because this is hire a great designer and who is really a user experienced architect, who is really an interface designer, because on these small screens it's so important. Even button placement, 1 millimeter changes the sizes for the customer journey. It's much harder than to design for the big screens, let's say, that we are not so used to anymore, I think. And then analyze them rigorously, test them, test where people click, test where they get out of your platform, because if there's something wrong, even 1 millimeter, it can mean that people leave the platform or the marketplace and these things and never come back again. And yeah, and I know you would really love probably to see some of our great designs, and but I'm definitely not going to show you, because this is definitely not the right time and place for that we can always do. And I just urge you, get really some good designs. We're not the only ones that are doing this well. And Olena will have also some great practical examples on some dashboards and how this is done. And yeah, so that would be my points. If there are any questions now, I'd be happy to answer them.
Okay, Daniel, thank you for that. There is one question effectively there, and that is just at the moment, just how smart is the technology? How good is it at actually being able to be relied upon, for example, reading documents? I think kind of work in progress on that one.
That is, I can answer it now if you want. So yes, this has gotten much better in the last years, actually. And this is also powered by AI. So what you do, you do kind of a hybrid thing. I mean, now in layman's terms, you best if you have a bit of structured documents that they look the same way roughly, and then you can kind of train the optical recognition, the OCR software. You can kind of train it to look for these areas, and this will definitely be better if you train it a little bit at least, and you know what you're looking for, as if every invoice, for example, will look a different way. And if it's properly trained, you can get recognition rates in the high 90s and 80s, high 90s, which is already good. I think much better than we used to have, but far from perfect.
It's never going to be able to read my writing though, so
mine is even worse, definitely.
Anyway, thank you for that, Daniel. Olena, you've been sitting there very patiently. We'd love to hear what you have to say.
Well, thank you, John, for inviting, and Daniel, thanks for your presentation. And thank you, actually, all attendees. I see we have plenty of them. Thanks for joining and staying. So yes, well, actually, what we thought as a futuristic, I mean, maybe even 2 or 3 months ago, now seems to be, our new reality. And now the digitalization of digital sales channels, operational systems, etc. So this is not an optional anymore. This is a must-have to continue the business, and including financial sector, of course. And this is also, if we will talk about the digital experience, so actually this goes in 2 sides, like digital experience for customers, which is, of course, as Daniel mentioned, the user experience, and the design will be probably the most important competitive advantage. So if it is really useful, if it is really not only looking good, but intuitive, I'd say. Because now, I mean, if we go even through, and if we talk about, say, about open banking even, so if it will be used by the fintechs or other third-party providers in a way that it can be used, so we will come to the times when you you will not need to go to the any applications or to the bank application, you know, to do the transaction from your bank or from another fintech company. So the application which you will be using will be actually the one which you like the most in terms of design and the user experience. So you don't need here. So banks will be like, you know, a source. I mean, there will be at a back office maybe, but we'll see. I mean, of course, now the predictions are very hard to do, and what we can surely see that now all the financial sector will be operating, I think, even probably till the end of the year, or maybe more, or maybe forever, in the situations with many unknowns. And we like have to, and this is new normal, I think, now. So even if you watch even at the beginning of this year, where banks were publishing their new digital strategies for the next 2 years. So we see, for example, in terms of digitalizations of the targets, where, I mean, the average target, if we look at the Central Eastern Europe region, was like to have 30 or 40% of the customers online in the digital channels, let's say, in terms of sales, in terms of the access to the online banking or mobile banking, etc. And what we have now is actually is almost 100% of the customers, you know, came to the digital channels almost overnight. And another challenge appears now, so that are the banks ready to have all the customers online, so the security questions arise, etc. So even you know, we see even the webinar platforms, the different ones, you know, cannot work properly just because we have so many online users at once online. So this will be, I mean, the next challenge, you know, not to attract or acquire customers online, but actually to support the online channels, because now we're all forced to the digital processes. So if we will share my presentation, if we go what is on some details, like what is going on in the region. Just a second. Yes. So what are the, maybe I will start from the opportunities, the challenges, what we are facing right now. So the main opportunities of this situation, of course, will gain the companies that were first of all investing in the digital channels, and actually now they can use it to the 100%, let's say. And if we will talk about receivable finances, so of course here the factoring looks on a very preferable situation, let's say a favorable situation. In two cases, well, first is this is just the banks or other financial organizations, let's say, are tightening their credit policies or lending policies, and there's asset-based lending, like factoring and leasing is coming very popular. This is first. Second thing is that due to the increased and extended, let's say, payment delays, which is very crucial, especially for SMEs, the factoring itself is becoming a very popular as a service itself. So even I read a statistic that during last month, the Google search, I mean, of the word factoring increased for 40%. So, so the service itself became more popular, and SMEs, which actually maybe even at the beginning of the year mainly didn't know what is it exactly, what does the factoring mean, are turning to this service right now. And of course, the companies that are offering this in a digital way will gain now the market, let's say, and the customers. I will switch maybe to some examples of the factoring, and then I'll show the trade finance tools. So if you look on the factoring solutions here on the market, so actually not at the moment, not much players are offering fully digital processes for everybody, for all the business customers, let's say, not only for SMEs. if we see the banks, so namely these are two banks in Poland, which is ING and mBank, and which are offering actually full digital process for SME customers, so that the customer applies online for the factoring, so receives the decision online, and also can upload further their invoices either via the online banking or the mobile app, using this, Daniel, that you mentioned, OCR functionality, that they can make a photo, for example, of the invoice that they received, for example, and just making a photo, uploading to their mobile app, and receiving their financing within 15 minutes, let's say. And several fintechs are appearing here on the market, offering also this fully digital solution. So there are 4 in Poland, and the other good example is coming from Romania. It is called eFactor, and this is actually not a factoring company itself, but rather a B2B marketplace where SMEs can upload their invoices, and there is a pool of investors that can invest, finance these invoices, so invoice by invoice, let's say. So the separate invoice. The example that I wanted to bring here when to show the fully digital processes for the factoring is the fintech, which is called Smeo, Polish one. And actually they're using all the techniques that Daniel mentioned in his presentation. So they're usually both artificial intelligence, machine learning, and also they're using very actively open banking solutions that are now, becoming really available for the fintechs, but not only for the fintechs, for the banks as well. We discussed, if we just say here a little bit about the open banking. So what we see here on the market is actually banks, which is a good sign. For example, here in Poland, the top banks already registered themselves as third-party providers. So they are. So what does it mean? This means that they want to offer their solutions to other financial companies, banks as well. So they do not want to be only data providers within this APIs. So 3 main APIs that are open now within the open banking. So the access to the customers' history of the account and transactions, let's say. But they will also want to use it and to offer it to other institutions. And we see also first integrations now that, let me say, 2 banks made it available that if you are, so in the mobile application of the bank that you're using, you can see current accounts and the history of the transaction from the other accounts that you are using in other banks. So they aggregated, so they did this account aggregation in their mobile apps, and this actually will become, so we'll see more and more examples, I'm sure. And actually in the UK, I think Revolut did this also possible for the business customers and also transactions. So so this is, shortly for the open banking possibilities. So turning to the digital factoring processes. So here actually the example where a customer can apply for a factoring limit online. So then the customer should give a consent that he's okay, or they are okay, that the company or fintech will approach their banking data. So and then of course then everything is done automatically. So using this API due to PSD2 directive, so the fintech is taking the information of the transaction. This is one of the main sources to make the decision, the automatical decision, and then the factoring limit is approved and customer receives it as a message, and then can upload the invoice and get the finance. And this is done, in a very short period of time. So this is not even a day. This is like 15 minutes. So, and these are the possibilities that can actually be used with the digitalization and actually now with the limit access to the branches and to the relationship managers. But still, these are very few examples now at the moment, so I'm sure that we will see this year more and more of this. And actually, I think that there is a market now for everyone, because this solution before the crisis, so the main part of business customers, they were using a traditional factoring services. So even if this was available online, like maybe, I don't know, like 1, 2, 3% were using this digital solution, while the others were using the traditional services. And now when everybody is limited to the physical contact, so these solutions are gaining the customers. So this is for, if we talk about the factoring, and the other part of the trade finance solutions or supply chain solutions, that the customers actually now SMEs expecting from the banks that will support them in all the solutions except in this trade finance. And now, even due to the decreasing of the trade, and I think SMEs suffers here is usually the most. So due to the decreasing of trade volumes of the goods, and the, the letter of guarantees and letter of credits, of course, have been used for these transactions mainly. So we will see maybe some decreases in these operations as well. And maybe this will be a second priority for the banks to digitalize this area of services. But maybe the after crisis situation will show and will push SMEs to go to other markets as well. And here actually they, as I also already mentioned, they're expecting that banks or other financial companies will support them with some solutions. So here is in some time, so we will see also the increasing of the digital tools for the letter of credit and for the guarantees. And actually here, if to show some examples, so this is the snapshot of the study that we did last year, and we will be updating it this summer. But at the moment, there is no big changes in these functionalities. So the solution that banks here are providing for SMEs is, for example, the foreign currency exchange model. This is a very important one for the SMEs doing export-import transactions. So now that customers have the availability, to the spot exchange rates and transactions forward, etc. Also, they can set the exchange rate that they want to buy or sell the currency, and then they are receiving the alerts when such exchange rate, for example, is available in the online banking of a concrete bank, and then they can do, for example, the exchange transaction. And for the guarantees and letter of credits, a situation is a bit better from the bank side. So 7 banks now in Poland are offering digital e-guarantees, let's say. So the customer can apply and then receive and receive the issued e-guarantees. Also in the online banking, there is also a template, so they can see all the actual or issued guarantees, etc., etc. And 3 banks in Poland offering letter of credit in electronic letter of credit, so also the application and the issue. And 1 bank in Czech Republic, which is Česká spořitelna Erste Bank Group, offers also this digital solution for guarantees. So this is what we see now. So as I mentioned, there is increase in this digital demand of the, first of all, the factoring, and these trade finance products will come with the second wave, I think. So now for banks, this is a challenge, and the target is to time to market their digital solutions fast, because the ones who will be the first will gain the customers. And also now this is a very good opportunity for the cooperation, between the banks. For example, there are also good examples coming from Poland that 3 banks were investing in the fintech that is issuing for business customers e-signature, that now these banks are using this for their customers. So to sign all the additional agreements, annexes, applications, everything online, and also they're using it to digitalize internal documentation of flows of documents inside the bank. So this is a good example of cooperation between the banks, and also the cooperation between banks and fintechs, and between banks and different providers, because the only possible way now to time to market fast is actually the cooperation and the implementation of ready-made solutions. So this is also one of the trends that we are seeing in the region.
Olena, if I could just interrupt you there for a moment, because I see that we've got a number of questions which are coming from the audience. And I think that they're generally around the fact that it's one thing, the digitalization of the process, but actually what are these banks doing to sort of ensure that what they do is secure? So how do they make sure that they have the ownership or the lien, depending on which legal environment you're in, of the underlying asset, and how do they make sure that that they're secure and that their fraud controls are in place? Because it's well, I think one of the key issues, isn't it, about when you're digitizing a service, is that you make sure that you don't lose any of the background checks.
Yes. Well, actually, I probably will not go here into much techniques. So in some technical stuff, but yes, the what we see actually, and this is available in Poland. If we talk about Poland, because this is the main country there where we see these digital solutions implemented and tested, etc. And if we see the digital strategies that they are having, and they're actually publishing them on their website, so everybody can enter the website and read it. So this is no secrets in this. And actually, the security part is one of the main part that banks now are budgeting this, targeting this, and this is the priority now. Because as I said, when now almost all the customers are switching to digital, and this is the main priority. The IT solution. I mean, this is an existing solution on the market. So. Either this is a cooperation with providers, or very rare their own solution of the banks. Here, if to go to some details, I can actually send some maybe print screens of the digital strategies of the main bank saying about the security, because this is a separate, a separate task or separate topic that we can talk very long and honestly, I'm not
yes, we could be talking about security all day for sure. That's right. I think perhaps it is just to reassure people that actually that when this digitization innovation takes place, that people aren't actually forgetting the basics, the fundamentals of the underlying process, and that there are mechanisms in place. We can reassure them of that.
No, I think that actually banks are not. I mean. They are remembering this, and this is the focus, because yes, with this digitalization, all the hackers attack, etc., has increased during the last months, and this is, I think that this is really the priority now for the banks if we're talking about existing operations, but also if this is an onboarding, customer onboarding, so all these KYC processes and digital signatures are certified and approved by the local. Let's say, either central bank or special financial committee, which is has this in their functions. So these are the solution accepted on the market, let's say.
Good. Okay. Thank you.
Thanks. Do you have any other questions to answer, or?
The question is, again, the extent to which these digital processes are going. Are they extending to a wider range of documents like shipping documents, bills of lading, certificates of origin, and really a little bit more about what an e-guarantee and an e-letter of credit would be? What is the difference between those and traditional paper?
Well, the main difference is that in this case, all the documents are available digitally and available in the electronic format. Mm-hmm. So this is the only difference. The scheme, how it's working, and the product itself. So this remains the same. The only thing is that, for example, in case of e-guarantee, that the customer receives this e-guarantee with e-signatures and certificates of the people signing from the banks, and the customer can check, the customer and the counterparty also can check this. So this is, for example, in Poland, this is a governmental portal that you can check if this person has a signature, so is authorized, to sign such kind of documents. And of course, the customer receives this certificate with the electronic version of guarantee. So this is attached to the document. And so the same in the exchange of the shipping documents also taking place online. But also what is also interesting that other fintechs are appearing now, that they are kind of substituting this, especially letter of credit. The one, for example, is called Octet, and they actually created a marketplace where targeted mainly for SMEs, where actually the SMEs can do their international trade transactions based on their card payments, and they actually provide the access to the access on the platform to all the shipping documents, to all the documents concerning the transaction, etc. So this actually if this will be the option, I could send some additional materials on that, because this is some practical examples of print screens how it works, because I don't have it in the presentation right now.
Yeah, you mentioned a particular example there. Of course, there are a number of companies that are involving themselves in different aspects of the whole value chain within trade, from order to final delivery. I suppose the other point that somebody has also made talking through is, Poland is a good example where the legal environment is pretty amenable. They're pretty sophisticated in terms of the legal environment for electronic digital business. But one of the challenges perhaps is that, are the legal and regulatory environments generally able to keep up with? Are they in line with the capabilities that digitization is able to provide?
Well, I think that now actually there is no other way. So, in terms of in terms of environment, this is also a movement or a push, let's call it this way, into sides. So from one side, the government is very open to the digitalization, and there is a Minister of Digitalization responsible for all the processes in the country, but also the consumers themselves and the banks are pushing this from their side as well. So I think just when this, two parts are coming together, then it makes possible, to proceed with such digital solutions and to have some legislations present in the country. So just this is, kind of mindset. If you think that there is no other option, and there is an option to go to a branch right now, there is not an option. So if you think this way, then you create these digital solutions. You are forced to implement these digital solutions, because, for example, customers will not go to a branch, let's say, if another bank provide fully digital solution. So this is also from the bank side kind of mindset. So they're not thinking about please come to us. You have to bring us, okay, instead of 10 documents, 1 document, for example, to prolong your, I don't know, factoring agreement or loan agreement or anything. But just they think that this is not an option to come to the branch. We should do it digitally. And they, you know, because the solutions are on the market. This is not that you now should create something new, but you can just prioritize the budget for this, prioritize the course on these solutions, and you just pick up the solution from the market and prioritize the implementation. And that's actually
Okay.
what it is.
Thank you. Well, I see that we're almost coming to the end of our allotted hour. The time has gone very quickly. So, Daniel, just pass back to you. Is there any closing thoughts that you might have?
Thank you, John, and thank you, Olena, for this for the presentation. I don't know if you can hear me and see me, because
Yes, we can.
Yeah. Okay. Super. So yeah. Thank you for that. And maybe 2 points. One is, I really liked your last point, Olena, about let's say the environment kind of forces us to do this now. You know, all these digital strategies that were lined up for the next, let's say, 5 to 10 years, or, you know, the way the future, we kind of have to do them now, because there is no other, in a lot of cases, there is no other possibilities. So, and we have to do it in weeks or in months, and not in years. So, yes. And we have to be suddenly good at it, because there is no other channel to do this. And in the very beginning, you said something about PSD2 and APIs, let's say, that the best design wins. And I would like to stress that again, because basically anybody can make up an app now, a dashboard which combines all accounts that you would just download, and it would combine all the accounts you have at different banks. And you can choose basically the best user experience for yourself, and transact with all accounts, and maybe do a little bit of trading on the side, and put a bit of cryptocurrencies on there as well. And this is, I mean, this is crazy. This never has happened before, because now you own your bank data and not the bank anymore, because of PSD2. You know, this is one thing that's that's often forgotten.
Okay, well, thank you. And we really are running out of our time now. We could go on all afternoon, I know, and I'd love to, but another occasion, it gives us a chance for another webinar in the future. So thank you. So, Olena, thank you very much for your presentation and your time. Very much appreciated. Daniel, too, that was great. Really good stuff there. And thank you to our audience for joining us in this afternoon. And we're very much looking forward to our next webinars with you. So thank you, everybody, and a very good afternoon and goodbye.
Yeah, thank you very much. Goodbye.
Thank you, Olena. Thank you, John.
Thank you.
And everybody for listening.